Good morning, afternoon, or evening, ladies and gentlemen. Allincrypto here, and welcome back, guys, for what is going to be nothing short of another jam-packed daily market update. If you're new around here, we do try and drop one of these around 1 p.m. UK time every single day to help you guys stay up to date with the latest and greatest things happening within the crypto space, but also the broader markets. That's exactly what we intend to do in this video. We'll start things off with, of course, the broader markets and the CPI print that we got yesterday. It really feeds into a more hawkish stance for the Federal Reserve in regards to not lowering interest rates as fast as everybody would like. Bit of a contradiction there in regards to what Trump and Elon Musk are saying. However, with a higher CPI number than expected and a recent trend, we're back at kind of July 2024's levels in regards to inflationary data. So we're not seeing progression in regards to it coming down. It supports the Fed holding rates for longer. Higher for longer. We saw yield spike. We saw the dollar spike initially and then kind of revert. We've got that broader trajectory for the dollar, which is going to be overall supportive for risk markets. And I really like Julian Bittle's take on that in regards to a repeat of 2017, the last time Trump got inaugurated, and what he did with the dollar to ultimately promote growth, economic growth, which of course markets will appreciate. And there's lots of sort of macro cycles that overline with that, with global liquidity and things like that, but perhaps beyond the scope of this video. So we'll start the video off there, and then we're going to talk about what JPMorgan has said in regards to Tether and the fears that that's now raising in regards to Tether's hoard of Bitcoin and them having to perhaps readjust that, sell it due to new stablecoin regulations, certainly within the United States, so that they can be compliant and continue to operate within the United States. Tether's obviously been sort of ousted from Europe. They've said they're not too fussed about Europe, and they're focusing more on places like South America, etc., where they're obviously very impactful. Tether is one of the greatest business ideas ever. I mean, they make more than most sort of commercial banks out there with just a handful of people. But this has, of course, caused a lot of fear. I ultimately think Tether, in terms of dominance, is really going to lose ground. And what you're going to see is the US promote players that are within their jurisdiction and tech companies like Ripple. Just like they do with the internet, they'll promote their own to ultimately maintain technological and fiscal dominance. Stable coins are essentially going to cause, I think, of a bit of a Brent Johnson dollar milkshake theory. You'll be exporting dollars globally in a very easy manner to do so, and thus US debt. This is a very interesting topic that I'm going to be speaking about tomorrow. And then, of course, Ethereum. There's now been, by 21 Shares, we interviewed the president of 21 Shares. We released that interview a couple of days ago, Duncan Moyer, a brilliant, brilliant mind, both financially and as it relates to the cryptocurrency space and more broadly. But 21 Shares have filed for an ETF that permissions staking. Now, this is very interesting, getting yield off these ETFs, and we're going to see how that factors into strategies coming. Remember, there's this kind of formation of the financial world around crypto, TradFi very much embracing it, and going to promote it. And then we'll finish off with some price action, because that's ultimately king for us in regards to trying to figure out what's going on. It quietens down all the noise. And really, to kick things off, let's look at the CPI that took place yesterday. The expectations were 2.9 and it came out at 3. So higher than expected. Month on month was also higher than expected. 0.2 up from the prior month. And core CPI also rose. So inflation rising across the board. This filters into really the Fed's narrative of or a hawkish narrative of high rates for longer. What I want to do is just dive over to the markets that were predominantly affected by that. Remember, what we're looking at is, this was the last time Trump got into office, and I think ultimately the dollar might start a broader journey down here. But if we drop down to, let's say, an hourly candle, you can see really this is what happened on the back end of CPI release. You can see this came out about 3 o'clock. 1 o'clock, which is UK time, which is when it was released, or in preparation for it being released. It came out about 1:30. But the dollar, obviously people get the information first, did spike up on the back end of this and then sort of folded down. Yields, however, have stayed stagnant. Now, this is kind of seesawing on the crypto markets. We want lower rates. We want a weaker dollar, Bitcoin versus the dollar, crypto versus the dollar. That's ultimately leaned on our market and is a kind of negative headwind. But generally, if we look at how Bitcoin kind of reacted, it sort of initially sold off, or actually spiked on the back end of it, and is now selling off a bit today. But Bitcoin largely, I think, just in a range environment, a range-bound environment that it will break to the upside of. And we'll look at that towards the end of the video and show you examples of other charts that broke into highs, did the same thing as Bitcoin, and then saw sort of broad continuation. So we will look at that. There is a lot of news circulating around Tether. Again, another negative narrative. And at a time when the crypto markets are a little bit lackluster. So it will go with a path of least resistance. JPMorgan, Tether might sell Bitcoin to meet US stablecoin rules. JPMorgan analysts have indicated that Tether, the issuer of USDT, might need to adjust their reserve strategy, including potentially selling off a significant portion of its Bitcoin holdings to comply with the forthcoming US stablecoin regulations. These regulations, expected to be implemented later this year, might require Tether to restructure its reserves to ensure compliance, as current estimates suggest only 66 to 83% of reserves meet proposed standards. Now, this was a good article that was published by The Block. It talks about JPMorgan and what they're essentially saying. If the regulations are passed, Tether may have to sell non-compliant assets, including Bitcoin, precious metals, corporate papers, and secured loans to comply with the proposed US stablecoin regulations, according to JPMorgan analysts. The US has introduced 2 stablecoin bills, the Stablecoin Transparency and Accountability for Better Ledger Economy Act in the House, and guiding and establishing national innovation for US stablecoins Act in the Senate, seeking to regulate stablecoin issuers with licensing requirements, risk management rules, and one-to-one reserve backing. Under the House Stablecoin Act, only 66% of Tether reserves are compliant, while under the Senate Genius Act, 83% meet standards. JPMorgan analyst led by Nicholas, not going to try and attempt his second name, wrote a report on Wednesday, being yesterday. Notably, both figures suggest a declining compliance ratio since mid-2024, last year. As stablecoin supply surge, the analysts have said. Tether currently holds 83,000 Bitcoin. Let's take a look at that. So this is Tether's holding, which is a hell of a lot of Bitcoin, valued around $8 billion. And essentially what's now being suggested is they may need to sell some of that Bitcoin if they want to operate within the US, which of course is going to be pretty important to their business model. Tether are the largest issuer of US stablecoins. Now, let's take a look at CoinMarketCap and where Tether currently is, and then I'll look at the Tether dominance chart. Tether is the 3rd biggest cryptocurrency that there is, sitting at $141 billion in terms of market cap. It's a hell of a lot of liquidity. They may need to sell some of their Bitcoin to adjust. I think Tether's on a downward trajectory. So one thing I've certainly looked at is, let's go to meeting, Tether dominance. Let's get off the hourly chart because it's totally unuseful here. And how actually I believe this is coming to around about 1.3% of the market. Today, it currently sits at 4.5. And I think that comes for a number of reasons. One, you'll typically see stablecoin dominance fall in a bull market, which I very much think we're in, is technically signaled. But also, I think through competition, something like Real USD or RLUSD, Rippled USD, I think is going to become the premier stablecoin. USDC, Circle, very much ran on XLM. These coins are likely going to gain ground. I also see downside for Circle, by the way, in terms of dominance, but I think that's to do more with a bull market scenario that we're looking at than competition. But Tether, I think, is in a little bit of trouble, and they may have an impact on the market. Tether is always going to be a factor, and this is all happening at a time when the markets are somewhat lackluster with the CPI report, etc. And the market's broadly just going with the path of least resistance. But this is the crypto space, guys. The road to glory when it comes to investing in the crypto space is literally filled with 30, 40, 50% pullbacks. Multiple of them along the way to those giant multiples. We've looked at this in regards to Ethereum in the last bull market, Cardano, etc., etc. There's a lot we can look at. And the question is, how do you deal with that? Do you try and time every local high and get in at every local bottom? I personally believe I can't do that. I don't think many people can in what is a broader uptrend. You get that wrong once, you're going to miss out on some serious gains, potentially lower your or increase your sort of average drastically. I think you're better off just holding for what is a broader bull market and stomaching the pullbacks. Personally, that's just my own take. I know some people may differ on that. But there's always going to be narratives that are going to kind of induce that. And to sort of dive back to the Bitcoin chart, I really think Bitcoin's in an amazing spot. I truly do. This has just broken out into all-time highs. This was our bull flag target. Obviously, we were keeping you up to date on the bull flag, saying it was likely going to break to the upside. And really what you've got is just a consolidation and a range sort of style environment that's likely going to lead to continuation. If we pull up, we were looking at BTC, DOM, and Total 3 versus Bitcoin. They're kind of the opposite of each other, both signaling that altcoins will start to outperform Bitcoin in the future. In the future, he says. And actually, significantly, I think Bitcoin dominance eventually in the future comes down to 20% with the maturing of this space. What I want to show you is just some examples. We've done this previously, but if you look at what Nvidia did once it broke out into its sort of highs or new all-time highs, it consolidated for a period. This is essentially exactly what Bitcoin is going through at the moment. And not only structurally do we expect what took place with Nvidia to take place with Bitcoin, we also have technical targets getting us there. And I can show you 1,000,001 examples. Let's not go on trades. Let's go on stage 2. Lots of stocks look amazing, by the way. Vanik Semiconductors, for example. You can see this sort of period of consolidation after highs. I can show you hundreds, literally, of examples. Just off the top of my head, maybe the DAX is a good example. You can see this sort of period of consolidation before continuation. That's what's to come for Bitcoin. So despite fears around Tether, and we'll see how that progresses, and data economically that perhaps supports the dollar's strength and the yields continuing or maintaining consistently being high, that's going to lean on the markets. Tether's a little bit of down news. But in the broader context, Bitcoin, certainly the totals, and altcoins are actually an amazing spot. I'll give you loads of altcoins, guys. Just like we looked at, it was like 15 or 16 falling wedges that all performed pretty much. I think cash was one that didn't. But the vast majority performed, giving hundreds of % returns. Actually, where altcoins are structurally is fantastic, ready for real acceleration and continuation in their phase 2s, their uptrends. It aligns with where Bitcoin's at and the continuation for that and the total market caps. Something like Tether coming down also. Of course, competition's an element, but generally Tether will sink in a bull market as far as dominance is concerned. When it walketh, talketh, and quacketh like a duck, ladies and gentlemen, it's a duck. So don't be worried. Focus on the bigger trajectory. We quietened down all the noise here. We did have yesterday... This is from James Safar, a great guy to follow, by the way. You should be following him. I believe this is the first ETF to file with the SEC and requests the ability to permit staking. The exchange purposed to amend 21 shares core Ethereum ETF. The trust shares the shares of which have been approved by the Commission to list and trade on exchanges to BZX rules to permit staking on Ethereum held by the trust. This is huge because it means people can actually garner rewards. And actually, just a few days ago, I managed to interview Duncan Moyer, a brilliant mind, truly. It was an absolute pleasure to interview him. And we actually speak about, he's now the president of 21 Shares on the Hedera sort of board as well. He's a board member, a big fan of HBAR. We spoke about this as a concept. And this actually is going to do interesting things as it relates to investing in these vehicles. And there's this kind of monetization of the crypto space that's currently taking place. So broadly, guys, that's it from me. The main news sort of circulating today is obviously Tether and what JPMorgan had to say. Tether are always going to be a bit of a sore point, whether that's people questioning their reserves, which we've come out against, and said actually Tether's fine. We don't think it's this black swan catalyst. But there is this argument that they may need to sell Bitcoin, and they've been a previously big buyer of Bitcoin to become compliant if they want to operate within the United States. We'll see how that unfolds. That could be some sell pressure. And obviously the CPI isn't great. Crypto just going with the path of least resistance. When you look at it in a broad context, very normal what's taking place. We will see that continuation. There's a 1,000,001 amazing fundamental narratives that see that take place. And interestingly, one thing people have taken their eyes off is the kind of FTX repayments, which is rumoured to be kicking off on the 18th of February. But perhaps I cover that in tomorrow's daily market update. Ladies and gentlemen, that is it from me. I'm going to love and leave you. Have a fantastic Thursday, and I'll see you all in the next one.